Hey, welcome back. Today we're talking about how to raise capital for real estate. So if you're a real estate investor who self-financed your first few deals and ran out of cash and credit to do more, chances are you want to find out how to raise capital to do more deals. That's what we're going to be talking about in today's video because that's what I got a ton of experience with. So we're going to take a look at different sources of capital, how to find investors, how to manage your investors, and how to succeed short-term and long-term in your real estate journey. Stay tuned. All right, so what are some of the different sources of capital? Well, first one is self-funding your deals. You probably have some experience with that, but maybe you're not aware of all of the different ways you can self-finance your deals. A lot of people save up, come up with the money for a down payment and buy a property. But did you know that you can use your home equity as a source of funds to buy your next property? Or perhaps you built up a bit of equity in your first investment property, get a HELOC on that, use that money to buy your next investment property. So if you've got money tied up in RRSPs or 401ks, if you're in the States, there are ways to access that capital to buy property. If you've got money sitting in mutual funds or you got money sitting in GICs or savings accounts, utilizing that money or in the stock market, take it out of there and use it to buy property. So there are different ways that you can self-finance your deals. But chances are you're looking for OPM, other people's money. So what are some of the options for that? Well, there is traditional financing where you go to the bank and you come up with a down payment and they finance the rest. That is OPM, because if you come up with 20-25% and they finance 70 or 80% of the purchase price, that is massive leverage, and that is other people's money in the form of a bank mortgage. Next thing you can be looking at are private lenders. So these can take many different forms. There are professional lenders like hard money lenders. They're kind of like the bank, but less fussy and a lot more expensive. Or you've got private lenders like joint venture partners who bring capital and maybe credit to the table in exchange for equity in the deal. You could have private lenders who are lending you money based on a just basically debt. So having some sort of a second mortgage on a property, a promissory note, just getting regular interest on their money. But these are private individuals who put their money into your deals. So how do you get these kind of private investors interested in your deals? First thing you want to have is a really strong pitch deck, a presentation, a business proposal, if you will. So again, big tip here that I always have for people is never assume that your private lenders, your private investors, your joint venture partners are real estate enthusiasts like you and I. Assume that they are normal people. So what does that mean? That means dumb it down. Keep it super simple, your presentation. You can have all the details and the charts and the graphs and the Excel spreadsheets in the background, but what you're going to show up front is Reader's Digest simple. Make it easy enough for an average 11, 12, 13-year-old kid to easily understand the concepts. If you hit it at that level, then that's what you want to shoot for. So where do you find these private lenders? Leverage what you've already got. I always tell our clients that you've got somewhere between $1 and $3 million of capital available to you right within your existing network. What is your existing network? Your friends, your family members, coworkers, business associates, people who you know and who know you, people that you have a pre-existing relationship with. These folks are the easiest, fastest, and safest sources of capital for private lending that you can possibly go after, right? So let's start there. Let's start with what you already have, and chances are you've got a lot more than you think you do. Next thing you want to make sure is that you're compliant with your local regulations and authorities when it comes to securities and raising capital, right? So if you're in the States, you've got the Securities and Exchange Commission, and each state has its own regulatory authority. If you're in Canada, each province has its own regulatory authority. And basically, you want to be aware of what you can and cannot do when it comes to raising private capital. So for example, I see a lot of people kind of advertising on social media what they're up to and that they're looking for investor partners. Hey, I've got this great deal. I'm looking for investors. I'm offering, up to 17% return on their investment guaranteed. All of that is a terrible, terrible idea. First of all, it's illegal. You and I as mom and pop real estate investors are not legally allowed to solicit investors in a public platform. So lots of people do that and they get away with it until they don't. Just be very, very aware of that. Do not proactively solicit investors on social media. That's a recipe for disaster. So you want to understand what the rules and regulations are. Typically, the securities are looking for us to raise capital from accredited investors, people with high income, high net worth. Challenges are there. Everybody's going after those folks and their money, so it's kind of difficult to make an impact, especially if you don't have much of a track record. However, there is an exception, and that typically is if we're working with close friends, family members, business associates, people that we have that pre-existing relationship with. So that's who I recommend that you focus on first. Again, it's just the most logical place to start because they already know you, like you, and trust you. Why would a complete stranger invest with you anyhow? Next part you want to have is effective communication with your investors. So let's say you bring on a joint venture partner or an investor. You want to make sure that you keep the lines of communication open, not just when you're hot to trot and trying to raise their money, but once the deal is actually underway. It's really interesting. I was just interviewing another lady on my podcast, and she was talking about some of the challenges that she had when she was first bringing on joint venture partners. Actually, she was bringing on limited partners into a syndication. She was working with a real estate outfit, and she was kind of like an investor capital raiser type person there. And she noticed that the people that she was working with didn't have very good communication with their investor partners, with their limited partners. So she took that role on and very, very quickly turned those frowns upside down from those investor partners by having regular, constant, consistent communication with your investors, how things were going. And typically the way that works is you want to keep it pretty heavy up front when the deal's just getting going and people are kind of nervous about it, and then you can dial it back as time goes on. So she started off with weekly communications with the investors. Once they got comfortable with that, then she dialed it down to twice a month, and then she ended up with monthly communications. And once the deal got up and going, turned that into quarterly, then semi-annual, and now she's on annual communications because the investors know that they're going to be kept abreast of any radical changes that might happen during the deal. And if they want some information, they're just a text or a call away, and that they're going to get that regular reporting at the end of the year. So again, start off with more communications up front, then whittle it down as you go. All right, so hopefully you enjoyed that quick little video on some ideas on how to raise capital for real estate. If you're looking for something way more in depth, go ahead, grab my book, Money Partner Formula, How to Raise 6 Figures in a Matter of Weeks, 7 Figures in a Matter of Months, even if you're starting from scratch, using a proven process that we've been doing since 2013. We've literally helped hundreds of our clients cumulatively raise well over $300 million and counting following this process. You can get it for free at investorattractionbook.com or click on the link in the description below.